This is a direct briefing from TradeRobotX Market Intelligence. Our focus today is on what we're calling the professional scalping trinity. That is, the three core markets that really serve as the primary battleground for high-frequency traders. We're going to examine the composition of this trinity and the specific rationale for its dominance. So this brings us to a central question. In a world with literally thousands of instruments you could trade, why do most professional scalpers concentrate their efforts on just three? This briefing is designed to answer that by dissecting the specific characteristics that set these particular markets apart from all the rest. All right, let's begin by identifying the three primary markets. According to the source, these instruments have a unique combination of massive liquidity, incredibly tight spreads, and a consistent flow of orders. This is what makes them the ideal environments for the kind of fast execution that scalping absolutely demands. The first component of this trinity is the Nasdaq 100 E-mini futures, which you probably know by its ticker, NQ. This instrument is a real cornerstone for traders who are looking for volatility that's driven by the technology sector. Now, let's break down the specific features of the NQ. The source identifies a huge intraday range, which is critical for opportunity. It's also known for these explosive bursts of momentum. And all of this is supported by deep liquidity and tight spreads. The key driver, as we mentioned, is that constant tech-driven volatility. So when is the best time to trade the NQ? Well, the optimal period for execution, as identified by the source, is right at the U.S. market open. This is the time of maximum volume and volatility, and it provides the most opportunities for scalping strategies to be effective. The second core market is the S&P 500 E-mini futures, or ES. This is one of the most significant equity index futures contracts in the world, and it represents the broader U.S. economy. The defining features of the ES really center on its stability and its scale. It's documented as the most liquid equity futures market on the planet. And because of that massive depth, you get minimal slippage when you execute an order. The order flow itself is described as smooth and stable, largely driven by the constant institutional hedging activity that's tied to the underlying S&P 500 index. It follows, then, that the recommended trading window for the ES is the entire U.S. session. That's when this institutional activity is at its absolute peak, ensuring you have that consistent market depth and a steady order flow. And now for the third and final market in the trinity. Here we move into the foreign exchange space with the EURUSD pair. This instrument really represents the intersection of the two largest economic blocks in the world. The EURUSD possesses what the source calls the deepest liquidity in all of global finance. That's what facilitates these ultra-tight spreads. Its volatility structure is described as clean, and it's well known for its strong, predictable reactions to major macroeconomic data releases from both the Eurozone and the United States. Given its global nature, the EURUSD actually has two peak liquidity periods. The first is the London market open. The second, and perhaps the most important, is the London-New York overlap, which is when the world's two largest financial centers are operating at the same time. Okay, so we've identified the three markets. Now we need to turn to the rationale for their dominance. This next section details the underlying factors that establish these markets as the absolute top tier for the professional scalping community. There are four primary factors here. First, that massive liquidity we keep talking about. It allows for instant order fills and minimal bid-ask spreads. Second, you have a continuous flow of orders from institutions that are active nearly 24/5. Third, they show strong, clear reactions to major economic news. And finally, they all possess a clean market microstructure, which allows for more predictable behavior and reliable execution. You know, to really understand why this core trinity is so effective, it's helpful to contrast it with markets that are a lot harder to scalp. This brings us to the critical principle of specialization. This slide gives us a direct contrast. The source material points to specific markets to avoid and the problems that come with them. Illiquid stocks, for example, have wide spreads. Exotic FX pairs can have sudden gaps in liquidity. Then commodities often have erratic price behavior, and low-volume crypto tokens can lead to unreliable fills. These are precisely the issues that the core trinity is structured to mitigate. And this leads to a key insight. Most scalpers working at proprietary trading firms don't actually trade all three of these markets. They specialize in just one. The source really summarizes this principle with a crucial quote. Deep mastery of a single market often beats watching 20 charts at once. The implication here is clear. You should place your focus on developing an intimate understanding of a single instrument's behavior and microstructure, rather than just a superficial understanding of many. All right, in our final section, we're going to cover some additional context and then provide a concluding summary of what we've discussed. Now, it's important to note that other markets can become effective scalping environments, but it's usually only during specific macroeconomic conditions or high volatility events. The source cites WTI crude oil futures, gold futures, and Bitcoin as some examples. But they aren't considered part of the core daily battleground for most professionals. So the final takeaway is this. The Nasdaq 100, the S&P 500, and the EURUSD pair, they form the scalping trinity because they consistently offer the absolute best balance of liquidity, volatility, and execution quality. For any strategy that relies on high-frequency decision-making, these three markets provide the most reliable and efficient environment to operate in.